Hello everyone, welcome to StudyIQ. In this video, I will bring to you the banking awareness for the month of September in English. This is Set-2. So let's start the video. Let us start with the very important survey. We call it the Periodic Labor Force Survey, right? Have you heard about it? Periodic Labor Force Survey. Now, Periodic Labor Force Survey report can be important from exam point of view because this was an annual report. So this was for the financial year 2024, Periodic Labor Force Survey. And who releases it? Periodic Labor Force Survey is released by the National Statistical Office, and National Statistical Office works under the Ministry of Statistics and Program Implementation. So these are the three rates which are important from exam point of view, and these are the only things that you need to remember. So labor force participation rate. What is labor force participation rate? Out of the total population, the number of people, labor force can be whom? Either who is working or who is searching for job. So out of the total population, the working or searching for work, that population, this you multiply by 100, that is called labor force participation rate. I repeat, out of the total population, the people who are either working or searching for job, you know, their number is labor force participation rate. Then you have worker population ratio, which is simply the from the total population, the number of people who are employed. You multiply that by 100. Very simple. So worker population ratio is defined as the percentage of employed persons in the population. And unemployment rate. So unemployment rate is defined as the percentage of people unemployed among the people in the labor force. So unemployment rate is the number of people who are unemployed divided by the labor force. Labor force is what? Again, labor force is either the people who are working or searching for job, and you multiply into 100. So that is called unemployment rate. So how much was it? So you can see Ministry of Statistics, they gave the data, and by the way, Periodic Labor Force Survey data annual report is from July to June. So this was from 1st of July 2023 to 30th of June 2024. Labor force participation rate for people who are above the age of 15 years and above. So during this year, July to June, it was 60.1%. 60.1%, which means what? It means that if there are 100 people in our population, for every 100 people, 60 people are either working or searching for job. So 60.1, that was the labor force participation rate, which means out of every 100 people in the population above 15 years, right? So out of every 100 people above the age of 15 years, 60 people are working and 40 are not working. They are not working and they are not wanting to work also. So 60 is the labor force participation rate. Now, and then you don't have to go into detail how much it is for the rural area, how much it is for the urban area and all that. No, not required. Then worker population ratio. Worker population ratio, again, for if you have every 100 people who are 15 years and above, so it was 58.2. So for every 100 people, 58.2 people, they are employed. That is called worker population ratio. For male, it was 76.3. For female, it was 40.3. Average 58.2. You have to remember only the average worker population ratio. Now let us come to the unemployment rate. So unemployment rate was 3.2%. Unemployment rate was 3.2%. By the way, it was same 3.2% for the financial year 23 as well. So there is no change in the unemployment rate. The unemployment rate is stagnant. Obviously, we want unemployment rate to go down, but we have not been able to do so. So in fact, this is the first time since 2017-18 that the unemployment rate has not decreased. So this shows the problem of unemployment is still persisting. So 3.2% was the unemployment rate, which means what? For every 100 people who are in the labor force, 3.2 people, they are unemployed. They are unemployed, right? So that is the unemployment rate. Now let us come to the interest equalization scheme on the pre and post shipment rupee export credit. There was a circular on 20th of September 2024. Now this is a bit confusing, but I'll try to make it very, very simple for you. Now this scheme was started in 2015. It is implemented by the Reserve Bank of India and it is monitored by Reserve Bank of India plus Directorate General of Foreign Trade, which works under the Ministry of Commerce. And here what happens? So two type of people, the normal exporters and the MSME exporters, they get cheap credit, right? If they want export loan, so normal exporter will get 2% interest subvention and MSME will get 3% interest subvention. And so this scheme, it kept on increasing. It was started on 1st of April 2015. So it was increased for 5 years. I mean, for again 2-3 years and all. Finally, it was supposed to end on 30th of June this year, 2024. Then it was extended by 2 months. So then, July and August more. So it was supposed to end on 31st August 2024. Then it is extended for 1 more month. So it is extended for 1 more month. And the annual net subvention amount is capped at 10 crore per importer exporter code for a given financial year. Accordingly, a cap of 5 crore per IEC for MSME manufacturer exporter is imposed till 30th of September 2024. So what happens was, in 1 year, now look, MSMEs can take loan and they will get 3% interest subvention, which means they have to pay 3% interest less, right, than a normal person who is taking a loan. So this benefit of 3% can maximum be 10 crore in one financial year. So that is in the financial year 25. Now this scheme was till 30th of September, which means we are talking about the first 6 months of the financial year 25. And therefore, in the first 6 months of the financial year 25, the benefit was capped not at 10 crore, but since it is half the year, so it is 5 crore. It is 5 crore, right? Also, this extension was done only for the MSME exporter and not for the normal person. Normal exporter will get 2% interest subvention, but the extension was done only for the MSME exporter. Now, Government of India, they auctioned some securities. So they auctioned securities worth 31,000 crore on 20th of September. They did it in 2 parts. So 20,000 crore worth of securities were auctioned and then 11,000 crore. On the 20,000 crore, the maturity period is 2034. So there are 10-year securities and you will get an interest rate of 7.10%. Then you have 11,000 crore worth of securities where the maturity period is 40 years, 2064, and interest rate will be 7.34%. And as always, the government auctions these securities on which platform? It is the core banking solution platform of the RBI, which is called eKuber. Now, this is a circular from last year, and why I'm showing you this is because the result has come. So see, Reserve Bank of India, they started a competition, and this is called Scheme for Writing Books, originally in Hindi, on economics, banking and financial subject. There is a shortage of good Hindi books in economics, right? You know it, I know it. Even we try to search on Amazon, there are no good books available. Now, Reserve Bank of India started a sort of a scheme, a competition, where it invited people to write good books in Hindi on the issue of banking, financial service, basically BFSI sector or economics, and whoever writes a good book, so there will be 3 prizes of 1.25 lakh each. So 3 best books will get 1.25 lakh rupees each. And this competition, the result has come. So there is a book called Jharkhand Economy. In Hindi, we call it Jharkhand Ki Arthvyavastha, the economy of Jharkhand. This is a book written by Vidyanand Chaudhary, and it has been selected for the prize 1.25 lakh. And of course, RBI will award 2 more books, but so far it has selected only 1 book. So this is a circular that came on 20th of September, that the scheme for writing books originally in Hindi on BFSI economy subject, the result has been declared for financial year 23. Now let us talk about priority sector lending. Look, there is no proper as such separate circular for that, but there was an essay, about priority sector lending, and I liked the essay, so I'm including this here. So this is a priority sector lending, the Indian experience, how priority sector lending, whether it is good, bad, whether it has worked or not. So all these things were there. So priority sector lending, basically, this is an essay that was written by Shambhavi, Arpita and Snehal, 3 people. And what did they find out? So they took a data from 2006 to 2023. They did a research of 17 years, very, very comprehensive research of 17 years. And this is what they found out. The cross-country evidence, which means pan-India evidence, suggests that the directed lending program with a strong institutional framework, strict performance standards, and effective monitoring are generally successful. The analysis of this article suggests that Indian banks' priority sector lending share is influenced by the asset quality of their priority sector portfolio. The introduction of priority sector lending certificates increase the lending to these sectors. Empirical findings indicate that banks with greater brick and mortar presence are better placed to extend priority credit at the grassroots level, and higher priority sector lending growth is also found to improve the bank's overall asset quality. So overall, everything is positive, right? They said that those banks which are doing greater priority sector lending, even more than required, they have a better asset quality. So it is not like if you give to the priority sectors, then you will have more non-performing assets. Nothing like that. So they found out that those banks which are giving good amount of priority sector lending, even more than what is required, they have a very good asset quality. They also said that the brick and mortar banks, the offline banks, the typical traditional banks which have branches, they are better in doing priority sector lending compared to the digital banks or the neo banks or the new age banks, right? So, and look, it is not like priority sector lending applies to everyone. So priority sector lending does not apply to NBFCs, right? Priority sector lending does not apply to the Mudra Bank. It does not apply to the All India Finance Institutions like National Housing Bank, NABARD, SIDBI, Exim, NABFID. It does not apply to Payment Bank. Payment Bank in any case cannot give loans, so it will not apply to payment banks. It does not apply to insurance companies, for example. So priority sector lending applies to normal scheduled commercial bank. So how much is the priority sector lending and which are the priority sectors? So priority sectors you must be already knowing, right? Priority sectors. And so for scheduled commercial banks, right, it is 40%. 40% of the adjusted net bank credit. In that there is a subcategory also. 18 out of 40%, 18% is for agriculture, 7.5% is for MSMEs, and 12% is for the weaker section of the society, right? Then what about regional rural bank? So regional rural bank are also a type of scheduled commercial banks only, but here priority sector lending is much higher. It is 75%. 75%. For agriculture, it is 18%, same. For MSMEs, it is 7.5%, same. But for weaker section, it is 15%. For scheduled commercial bank, it is 12%. Here it is 15%. And then for the small finance banks also, it is 75% priority sector lending. So 18% to agriculture, 7.5% to MSME, and 12% to the weaker section of the society. Weaker sections of the society, right? And which are the priority sector? Agriculture, MSMEs, education, housing, renewable energy. I mean, all of these are priority sectors. So banks, they are mandated by the RBI to give 40% of the loan money that is available to the priority sectors, right? Okay. Now, a review of the NBFC sector in the recent time. This is an essay that was written by 3 people, Abhyuday, Rajneesh, and Nandini Jayakumar, and even Brijesh, 4 people. And even though it is not that important, but I like this article because it is on the RBI website. It is an essay. And it says that the NBFCs in India, they are doing well. And they also said that there is a scale-based regulation. Scale-based regulation. Look, what is scale-based regulation? So there is a scale-based regulation, which simply means that the NBFCs, they were divided into multiple parts. Okay. So which are those? So base layer NBFCs. In base layer, you have the non-deposit taking NBFCs, which are below the asset size of 1000 crore. Then NBFCs undertaking the following activity: peer-to-peer, account aggregator, then all of these. In the middle layer, you have all the deposit taking NBFCs and non-deposit taking with asset size of 1000 crore and more. You also have the core investment company, the housing finance company, the infrastructure finance company, the infrastructure debt fund NBFC, standalone primary dealer. So all of these are the middle layer. Then you have the upper layer. This upper layer will have those NBFCs which required enhanced monitoring, right? So top 10 eligible NBFCs in terms of their asset size will be in the upper layer. They will require enhanced monitoring by the RBI. And then you have the top layer. They should remain empty, but if there is a NBFC which is facing any systemic failure, huge problem, that will be put in the top layer by the RBI for very, very close monitoring. So this is the scale-based regulation of the classification of the NBFCs. And it says that because of this scale-based regulation framework, the condition of the NBFCs has improved. All the parameters of NBFCs has improved. The gross non-performing assets have gone down. The capital adequacy has gone up. The return on assets is positive. So all the things which show that NBFCs are doing well, they are doing well. And how they are doing well, let me show you data. So this is a data from the Financial Stability Report of the RBI. Financial Stability Report of the RBI is one of the best documents to see the data. Okay. So look here. Non-banking financial company, their capital adequacy stood at 26.6%. 26.6%. It should be above 15% for NBFCs, but look at here, it is 26.6% for all the NBFCs of India at the end of the financial year 24. And the gross non-performing assets, gross NPAs, were at just 4%. The gross non-performing assets of the NBFCs in India were only 4% at the end of the financial year 2024. And look at the return on assets, it is positive. In fact, it is plus 3.3%, which is very healthy. All of this data shows that the NBFCs of India are doing well, and that was said in that particular essay also. Now there are two banks, both are cooperative bank. One is called the Rajapur Sehkari Bank, which is based in Mumbai, and the other one is the Malad Sehkari Bank, which is based in Mumbai. So they are getting merged together, and Reserve Bank of India has approved their merger. Okay, so which two banks are merging together? Rajapur Cooperative Bank, Rajapur Sehkari Bank, and Malad Sehkari Bank. Now on 26th of September, Government of India did again the auction for the government securities. Now this was worth 34,000 crore. They did it in three parts: 12,000, 12,000, and 10,000. Total 34,000 crore. So one security of 12,000 crore is it has a maturity period of 5 years, and you will get 7.04%. Another one will have a maturity period of 15 years, and your bond matures in 2039 and you get 7.23%. And the last 10,000 crore is maturity period of 30 years and 7.09%. Now, Lakshadweep Islands are very beautiful islands in the Arabian Sea, not very far from Maldives, right? What is the status of the digital financial literacy? So there was a Reserve Bank of India study that was done, that what is the status of digital financial literacy in Lakshadweep Islands, the bottlenecks and the way forward. So bottleneck simply means the things that are stopping you, right? So there are a lot of these islands. In fact, they did a survey, primary data they collected. What is primary data? They actually went ahead and asked the people of Lakshadweep. That is called primary data. So they surveyed how many islands of Lakshadweep? They surveyed all the 10 inhabited islands in Lakshadweep. So in Lakshadweep, there are 10 islands where actually people live. They went to all the 10 islands. Which are these 10 islands? Agatti, we have the Lakshadweep airport in Agatti, Amini, Androth, Bitra, Chetlat, Kadmat, Kalpeni, Kavarati, Kiltan, and Minicoy. So these are the islands that were surveyed. And what did they find out? So they found out that, all the individual respondents said that they have a account, so 90% of the people, they have a deposit account. They have a savings account in the bank, right? And then 91% of the men, they operate the account by themselves, and 71% women, they operate the account by themselves. So there is considerable know-how on how to access your saving account in the banks, deposit accounts. Digital literacy was also satisfactory, right? So people are using mobile phones, computers, so it was found to be high. The basic digital literacy was found to be high. ATMs people are using, no problem. 90% people said that they have ATM card. 80% people actually are using the ATM cards, right? And internet banking and mobile banking is not very prevalent in Lakshadweep. People don't do that much internet banking and mobile banking. In fact, only 38% people, they do mobile banking. They do mobile banking. And despite a very high degree of financial inclusion and digital literacy, a major barrier towards digital financial inclusion was the poor internet connectivity. But now things are improving because we have this optic fiber cable from Lakshadweep, between Lakshadweep and Kochi, Kerala, that is coming up. So all these things will improve the internet connectivity. Because of the lack of internet connectivity, that is a major barrier in the digital financial inclusion. And 30% of the survey respondents were familiar with digital hygiene habits, which means how you can keep yourself safe. For example, how to use the public internet connection. I mean, cyber security, they were not very aware of that. Only 30% people, they did the internet in such a manner that they are not in any trouble. Now let us talk about a very, very important circular, which is about the ways and means advances of the Reserve Bank of India. You very well know what is a ways and means advance. That I don't think there is any any need to repeat. I have explained to you ways and means advances multiple times, right? I can't even tell you how many times I have explain to you what is a ways and means advance. So ways and means advance, I will quickly repeat. Ways and means advance is a facility that was launched in 1997 by the Reserve Bank of India, and according to section 17(5) of the RBI Act of 1934, RBI can give loans to the states, so ways and means advance, it is as per the section 17(5) of the RBI Act of 1934. This section 17(5) of the RBI Act of 1934 authorizes the RBI to lend to the central government as well as the state government. And in the second half of the financial year 2024-25, which means from 1st October 2024 to 31st March 2025, these 6 months period, how much is the amount that RBI can give as a loan? So that amount is 50,000 crore. 50,000 crore. Is that clear? And RBI can increase this amount. So RBI can trigger fresh flotation of the market loans when the government of India utilizes 75% of the WMA limit. 75% of the WMA limit. Now let's say there is any state which is borrowing from the RBI. How much interest rate applies? So you have to return the money to the RBI within 90 days. If you do that, you will be charged repo rate. Whatever is the repo rate of that time, you will be charged that. And if you delay, so if you make a delay, if you don't return it for 90 days, if you take more than 90 days, it is treated as an overdraft, and then you have to pay 2% above the repo rate. So whatever is the repo rate that time, you have to pay 2% more. 2% more, right? So that is the ways and means advances for you. So do remember the limit, it is 50,000 crore for the 6 months period. And then treasury bills, they will be auctioned by the government of India on different days. So 4th October. So this calendar has come. 3 months are remaining in this calendar year, and from October to December, lot of treasury bills will be issued by the government of India, and you should definitely know about it, right? Because these are one of the ways to raise money by the government of India. By the government of India, right? Treasury bills are very, very important for raising money, right? Now, what is a treasury bill? See, treasury bills are money market instruments, right? There are 3 types of treasury bill. Here you can see 91 days, 182 days, and 364 days. And they are zero coupon securities, which means they don't pay any interest. Now you will ask me, if they don't pay any interest, why I as an individual will invest in them? Because, so this is how treasury bill works. First of all, yes, you don't get any interest, but they are issued at a discount. For example, let's say there is a treasury bill worth 100 rupees. Okay, this is the face value. So you will get it at, let's say, 98 rupees. Okay, and then when you redeem, so after 91 days, assuming it is a 91 days treasury bill, it can be 91 day, it can be 182 days, or it can be 364 days. There are 3 durations of treasury bill. So let's say government is giving you a 91 days treasury bill and you are investing 100 rupees. 100 rupees is the face value, but government will give it to you at a discount of 98. So after 91 days, you can redeem it. You can give it back to the government and take 100. So you have earned 2 rupees interest. So this 2 rupees is your benefit. So you will not get any interest as such. They are zero coupon security. They pay no interest. But since you purchase them at a discount, you can redeem it at a face value, and that difference will be the money that you earn, right? So the return to the investors is the difference between the maturity value or the face value and the issue price. That is how you earn. That is how you earn. So Reserve Bank of India will auction the treasury bills on behalf of the government of India, where again on the eKuber platform, and minimum investment in treasury bill is 25,000 rupees. Okay, this amount is very important. On 90% of the websites, it is written wrong. Some say 10,000, some say 5,000. They have not updated. The amount minimum investment in treasury bill is 25,000, and further in multiples of 25,000 rupees. Now treasury bills, they were first issued in India in 1917. So they are very old, and I mean, who can purchase treasury bill? Individuals, firms, trust institutions, banks, they can all purchase treasury bill. So treasury bills are issued by the government of India to raise money, to regulate the flow of money in the economy. Now there was a conference for the directors on the boards of the small finance banks. It was held in Bengaluru. It was held in Bengaluru. It was organized by the Reserve Bank of India, and it was inaugurated by Mr. J. Swaminathan. He is the Deputy Governor of the RBI. So this was about how we can make the small finance banks better, what are the problems in the small finance banks, and all these things were discussed here, right? They spoke on different issues. They spoke on small finance banks prospects and challenges, the cyber security risk in the small finance banks, all these things they basically discussed. And small finance banks, they are again very important from exam point of view, right? Small finance banks, they were opened in India on the recommendations of the Usha Thorat Committee. Usha Thorat Committee. And of course, they have some, restrictions. For example, 50% of the loans that they give should be less than 25 lakh rupees in value, right? 50% of the loans that they give should be less than 25 lakh rupees. 75% priority sector lending is there for small finance banks. So these are some guideline. And of course, the 200 crore, if you want to open a small finance bank, you should have a capital of at least 200 crore rupees. 200 crore rupees. And of course, there are many small finance banks in India. Now, there is a floating rate bond. Floating rate bond simply means that the interest rate is not fixed. It is floating. So it is changed from time to time. So this is for that bond that matures in 2033. So what is the rate of interest? Well, the rate of interest is from 22nd September 2024 to 21st March 2025. This is a 6 months period. Half year from this to this date will be 7.93%. 7.93%. And how did the government arrive at this figure? So what they do is they take the interest rate on the 182 days maturity period treasury bill, the last 3 auctions, and then they add a spread of 1.22%. So the last 3 treasury bills that were issued by the government of India that were auctioned, T1, T2, T3, last 3, right? They take their average interest rate and add a spread of 1.22%, and that comes out to be 7.93%. So this is one of the ways, one of the, like you can say, the formula by the government of India to calculate the interest rate. Is that clear? Okay, now let us come to the MCQs. The Ministry of Corporate Affairs, which is headed by Nirmala Sitharaman, has notified the Competition Amendment Act of 2023 to revamp the merger control regime with effect from 10th of September. Look, these new regulations come in effect from 10th of September. So as per the regulations, the review period for merger acquisition transaction has been reduced from 210 days to how much? So a very nice question. It has been reduced from 210 days to 150 days. So let us say there are 2 companies, company 1 and company 2, they want to merge together and they have to take permission from the Competition Commission of India. So earlier the decision needed to be made in 7 months or 210 days. Now it has been reduced to 150 days or roughly 5 months. And another very important thing, there is something called deal value threshold. So those merger acquisitions where the deal value exceeds 2000 crore, it has to be approved by the Competition Commission of India. If the deal value is more than 2000 crore, then it has to be approved by the Competition Commission of India. Let's say company 1 is buying company 2 for 100 crore. Then does it require the permission of the Competition Commission of India? No, it does not. No, it does not. So deal value threshold is more than 2000 crore only. If it is more than 2000 crore, only then the permission is required. Now, why this has been done? Because there are a lot of digital companies, technology companies, they don't have any assets, physical assets as such. But let's say there is a digital company, company 1, there is a digital company, company 2, and this is a deal worth 2500 crore. So company 1, digital 1 company is acquiring the second digital company for 2500 crore. So it has to be permission needs to be taken from Competition Commission of India. Why they have done it? Because these digital companies, they don't have any physical assets as such, right? They can be social media companies. All these are intangible assets. So when their assets are intangible, then there is a huge chance of money laundering. That is why the deal value threshold has been added. So why was this provision introduced? Because there is a challenge in evaluating digital sector transactions. Digital sector transaction. And as I said, these deal value threshold will become applicable from 10th of September 2024. Now another thing. So there are 2 types of forms that you have to fill and the fee has been increased. So there is form 1 for merger acquisition. with lower combined market share, the fee is set as 30 lakh. Form 2, if the parties have a combined market share of more than 15% or individual market share of over 25%, they must fill Form 2. The fee will be 90 lakh rupees. What is the meaning of all this? Let's say there is company 1 and there is company 2. Okay. Now let's say both are telecom companies. Now company 1 is acquiring company 2 and the joint entity will have a market share of more than 15%. So let's say the market share is 21%. Then they have to fill Form 2. But if the market share is very less, even after combining both two companies, the market share is, let's say, only 2%, then Form 1 is enough. They have to pay only 30 lakh rupees. But if the market share, combined market share after the merger or acquisition is over 15%, then they have to fill Form 2. Similarly, if out of the two companies, one already has a market share of more than 25%, then they have to fill Form 2 and they have to pay 90 lakh rupees as the form fee. Right? And what is the difference between a merger and acquisition? So see, merger basically simply means when the two companies which are getting merged into each other, they both are of approximately similar size, right? Acquisition means when a very large company is buying a very small company, that is called an acquisition. So one more thing, are there any deals, are there any merger acquisition which are exempt from CCI, from Competition Commission of India's approval? Yes. So under the competition rules, the companies with assets below 450 crore or if their turnover is below 1250 crore, they are exempt from seeking CCI approval. So if there is any company where their assets are below 450 crore, right, below 450 crore, or if their turnover is below 1250 crore, assets below 450 crore, turnover below 1250 crore, then they don't need the permission of Competition Commission of India. So they are exempt. This is called safe harbor rule. Safe harbor rule. Is that understood now? And as I told you, amendments have been made in the Competition Act and the review period has been decreased from 210 days to 150 calendar days. Which of the following company has become the 6th Indian startup to achieve the $1 billion valuation? $1 billion valuation simply means a unicorn valuation. The company is known as a unicorn company. So this is MoneyView. It is a company based in Bangalore. And it has become a unicorn company. In fact, MoneyView company has acquired a company called Jiffy. MoneyView company has acquired a company called Jiffy. Jiffy is a wage access platform. And now it has become a unicorn company. So MoneyView is a fintech company and it is based in Bangalore. And before this, so it is the 6th company in the calendar year 2024 to become unicorn, which was the 5th. 5th was Ather Energy. Ather Energy company that raised money from National Investment and Infrastructure Fund, which is India's infrastructure focused sovereign wealth fund. So in NIIF, Government of India has 49% stake, right? And then of course there are others like Rapido, Porter, Perfios and Krutrim AI. All of these are unicorn companies of 2024. Recently, Trade Connect e-platform has been launched to support Indian exporters, MSMEs and entrepreneurs. The platform is developed in collaboration with the key partners including Ministry of MSME, Department of Financial Services, Ministry of External Affairs and which organization? So this is the Exim Bank, Export Import Bank of India. So why they have done it? Let me explain. Now, first of all, you should know all the organizations which collaborated. So as I said, Ministry of MSME, Exim Bank, Tata Consultancy Services, which is the largest IT company of India, Department of Financial Services, which works under the Ministry of Finance, and Ministry of External Affairs. So they have brought everything related to exports under one umbrella. Now, what is the meaning of brought everything under one umbrella? Look, we have a very ambitious target. We want to export $1 trillion of goods and $1 trillion of services by 2030. So our target is to export $2 trillion worth of goods and services by 2030. But look at our exports, how flat they were in the financial year 24. So the total exports of India, merchandise and services combined, they were $776 billion in financial year 24. In the financial year 23, they were 776. So they were almost flat. There was a growth of just 0.36%, which is negligible. Exports are flat. If we have to go from $776 billion to 2 trillion, we have to make them 3 times by 2030. That is just what, 6 years away. So merchandise export was 437 out of 776, and in financial year 24, in fact, merchandise exports were below financial year 23 level. Merchandise exports in financial year 23 were 451, so we have actually gone down in the merchandise export. Services export, they grew. So services exports were $325 billion in financial year 23, and they increased to 339 overall, but exports were flat. So we need to do something about it. So what we have done is we have started this platform, Trade E-Connect. Now, what is the meaning of this? See, let's say Trade Connect, we call it Trade Connect E-Platform. See, if you are a MSME, for example, now you don't know anything about how to export, you will be given all the knowledge, right? You will be told about the export risk. You will be given export import statistics. You will be connected to different countries. You will be told to get certificate for your products and services so that there is quality assurance. You will be connected to the Indian mission officials abroad. You will be connected to export promotion councils and industry experts. That is how you increase the exports, right? So there is a certificate of origin wallet, certificate of origin, so which certifies that goods in a shipment are wholly obtained, produced, manufactured or processed in a particular country. If you are an Indian MSME, you want a proof that whatever you are selling was made in India, then certificate of origin will be given to you. And this portal will allow the exporters to apply for certificate of origin and add the amount to their certificate of origin wallet. And the portal will provide you information. Like if you are MSME, it will tell you about the global demand of your product or service, which countries you should sell to, international standards of the goods and services, the foreign buyers information. So which are the foreign buyers who are more likely to buy your products? All these things will be on this platform. So it will increase the exports. And if you see some data, for example, according to the economic survey this year, financial year 24, India's market share in the global exports of goods was just 1.8% in the financial year 24. Just 1.8%. This is our market share in the global exports. Obviously, we need to increase it. Jan Sunwai portal has been launched recently to streamline the communication between stakeholders and authority. It is an online platform of which of the following government department? So it has been launched recently by the Department of Commerce, and Department of Commerce works under the Ministry of Commerce and Industry. So Minister for Commerce Piyush Goyal launched 2 digital initiatives. One is the Jan Sunwai portal. It will provide exporters with necessary information, clarification, concerns. They can do grievances redressal, find the status of their complaint in real time, and video conferencing they can do with directly the government officials on Jan Sunwai portal. So they will not need to visit any government office. There will not be any need to run behind government official. Jan Sunwai portal, you can directly connect with the government official if you are an exporter. And the second thing that he launched is called Enterprise Resource Planning Portal. This is a portal of ECGC, Export Credit Guarantee Corporation of India, which provides you export credit guarantee. What is export credit guarantee? If you are an exporter and you are worried that once you export, the buyer will not send you the money from overseas, you can take insurance against that by Export Credit Guarantee Corporation of India. So Enterprise Resource Planning Portal will make all the services offered by ECGC online. Like for example, filing of forms, claims, reimbursements, grievances redressal, policy information, credit support, everything will be on ERP portal. This is a portal of ECGC. Another important thing, on this portal, if you are a MSME and you have a credit limit of up to 80 crore, MSMEs till the credit limit of 80 crore, they can get 90% amount covered by credit insurance, export credit insurance. Is that understood? What is the meaning of this? So if you are a MSME exporter, right, you are selling exports up to 80 crore abroad, you can insure this amount up to 90% on this portal. Which of the following company has launched Sarthi app in collaboration with Bhashini? Bhashini is a product of the Bhashini division of the Ministry of Electronics and IT. There is a digital Bhashini division. Bhashini translates, among different Indian languages. So to assist the businesses in creating their own buyer side apps. If you want to sell your product on ONDC, you can create your own app and then sell on ONDC. That is the app for the buyers. So the answer is ONDC. ONDC has given a facility. It has launched a mobile app called Sarthi, and normal businesses can use this app to create their own customized app. So initially it is supporting 5 languages: Hindi, English, Marathi, Bangla and Tamil. But later on it will be scaled to all the 22 languages which are in the 8th schedule of the Constitution of India. And Bhashini is a artificial intelligence powered language translation platform. Language translation platform. ONDC was launched by the DPIIT Ministry of Commerce in 2021. 2021. Recently, R.S. Sharma has become the non-executive chairperson of ONDC. According to Informa Connect Academy report called 2024 Trillion Dollar Club, Elon Musk is most likely to become the world's first trillionaire by 2027. As per the report, who from India can become the second trillionaire by 2028? So this is a very interesting report. Currently, we only have billionaires in the world, but the first trillionaire, 1 trillion is equal to $1,000 billion. So the first trillionaire can be Elon Musk as early as 2027. Gautam Adani can be the second trillionaire of the world, and this can be achieved by 2028 if the Adani Group company grow at 123%. Let me show you. So these are the only trillion-dollar businesses in the world. So there are 7 companies in the world which are trillion-dollar businesses, which are valued at more than $1 trillion. Current market capitalization or current market valuation, you can see Microsoft is the most valuable company in the world. Apple is number 2. Nvidia by Jensen Huang, which is a graphic chips making company, is number 3. Alphabet, parent company of Google, is number 4. Amazon is number 5. Saudi company Aramco is number 6. And Meta is number 7. So these are the top 7 companies. All are trillion-dollar businesses. Now there are some companies which can become trillion-dollar businesses very soon, like Taiwan Semiconductor Manufacturing Company. It is valued very near to 1 trillion. Berkshire Hathaway, which is a investment company by Warren Buffett, so 874 billion. Eli Lilly, American company, pharmaceutical company, it can also become a trillion-dollar company. Broadcom, American company, and Tesla, electric vehicle company from America, can also become trillion-dollar company. So you can see TSMC can become as early as 2025. In fact, as early as 2025, these companies can become trillion-dollar companies. And you can see here there is an Indian company, Reliance, also. It is 25th in the list. Reliance Industries Limited from India can become a trillion-dollar company by 2035. And Elon Musk is number 1, Gautam Adani number 2, Jensen Huang is number 3, and these people can become trillionaires. So in fact, Elon Musk can become trillionaire by 2027 itself, and Gautam Adani, Jensen Huang, and there is a Indonesian petrochemical energy giant magnate called Pragosu Pangetsu can also become a trillionaire by as early as 2028. And 3 women can also become trillionaire. So the most likely to become a trillionaire is François Bettencourt-Meyer. She is the owner of a French beauty company, L'Oreal, and she can become a trillionaire by 2040. 2040. HCL Technology in Noida has been named the number 1 Indian headquartered company in the Time magazine's World Best Companies. Which company has topped the list globally? So you can see Apple is number 1, Accenture number 2, Microsoft number 3. The answer is Apple. And Accenture is a company that is headquartered in Ireland. If you talk about the Indian company, then you can see HCL Tech is the best company in India. Infosys is at 2nd position in India but 119th globally. Wipro is 3rd best but 134th globally. Recently, there is a digital platform called Bhaskar. It has been launched to centralize, streamline, and enhance the collaboration among key stakeholders within the entrepreneurial ecosystem. This platform has been launched by which government department? So this platform, Bhaskar, has been recently launched as a part of the Startup India scheme. First thing to remember is that. And they are asking which government department. So the answer is very simple: DPIIT, Ministry of Commerce. The word Bhaskar means rising sun. The full form of Bhaskar is Bharat Startup Knowledge Access Registry. So this is a platform that will bridge the gap between the startups, investors, mentors, and other stakeholders, allowing seamless interaction across the sectors. It will provide centralized access to the resources. So all the resources, if you're a startup or MSME, you will get here, and every stakeholder will get a unique Bhaskar ID. Then it will support India's global brands also. It will increase India's global reputation. So if you are a startup person, what do you need? You need investors, mentors, you need accelerators, boot camps, workshops. Everything will be available on one platform, that is Bhaskar. And Startup India scheme was started on 16th of January 2016. 16th of January 2016, right? So India now has more than 13 lakh startups registered by DPIIT. Ministry of Statistics and Program Implementation, they had made two committees, committee number 1 and committee number 2. Now, they have dissolved one of the committees. Dissolved means the committee is not needed anymore. It was a 14-member standing committee on statistics. Why this committee has been dissolved? Because its role and responsibilities were very similar to the second committee that they had made earlier. So, who is the chairman of this committee which has been dissolved? The committee that has been dissolved recently, the chairman of that committee is Pranab Sen. He is the former chief statistician of India. And the committee which is still there, that is called the Steering Committee for the National Sample Survey. And the chairman of this committee was Rajiv Lakshman Karandikar. So be very careful. They can ask any of the two committees. The committee that is still there, Steering Committee for the National Sample Survey, this is still there. Rajiv Lakshman Karandikar is the chairman of the same. But the committee that has been dissolved, Standing Committee on Statistics, its chairman is Pranab Sen. Prime Minister of India launched the Subhadra scheme. It has been launched by which state? So it has been launched by the government of Odisha. It has been launched by the government of Odisha. And what is Subhadra scheme? 1 crore women it will benefit in Odisha. It is one of the largest women-centric schemes in India. Those women who are between the age group of 21 to 60 years, they will get 50,000 rupees in the next 5 years. They will get 10,000 rupees per year for next 5 years. Right? So from 2024-25 all the way till 2028-29. So 10,000 rupees they will get every year in two installments. One will be on Rakhi Purnima. Rakhi Purnima is nothing but Raksha Bandhan. And the second installment they will get on the International Women's Day, which is 8th of March. Right? So that is Subhadra scheme for you. Prime Minister of India has launched Single Window IT System platform, which is designed to streamline financial services. This platform is developed by which organization? Single Window IT System platform. So this is a platform that has been launched by IFSCA, International Financial Services Center Authority, that is headquartered in Gandhinagar in Gujarat. So this will streamline the financial services in all the IFSCs in India, such as the GIFT City in Gujarat. And the Prime Minister of India also flagged off India's first Namo Bharat Rapid Rail between Ahmedabad and Bhuj. Now, Namo Bharat trains are also known as Regional Rapid Transit System. They are also known as Namo Bharat or Rapid X. The first such train in India is from Delhi to Meerut via Ghaziabad. And in Gujarat, this is the first, Ahmedabad and Bhuj. So how will Single Window IT System or SWITS of IFSCA help? Well, it will promote ease of doing business. It will streamline the application process. It will eliminate the need for businesses to navigate multiple authorities independently for various necessary approvals. So all the approvals you will get at one place, which is Single Window IT System. So it will allow the applicants to submit their application, obtain approval, and fulfill approval-related regulatory requirements all in a seamless manner. According to the Reserve Bank of India data, small savings schemes, they have grown by what percentage up to the February 2024, reaching 18.1 lakh crore. You know, there are various small savings schemes, right? And all of them are showing a good growth. Now, if you talk about in terms of percentage in amount, so all the small savings schemes of India put together, they have around 18 lakh crore in the savings, right? And they have grown 13.8% according to the government data. 13.8%. Here you can see the growth. You see the growth of the small savings schemes in the last few years, right? The amount it is reaching is almost 18.1 lakh crore. And here you can see the growth 13.8. So it has been ever increasing. 13.8%. So which are the small savings schemes? And which small savings scheme showed the maximum growth? Sukanya Samriddhi Yojana. It saw a growth of 41% in just 1 year between February 2023 to February 2024. Senior Citizen Savings Scheme, look at the growth 28%. Why? Because Senior Citizen Savings Scheme, the amount was doubled last year. You could invest earlier maximum 15 lakh rupees, but now you can invest maximum 30 lakh rupees. So you can see a growth of 28%. Maximum was in Sukanya Samriddhi, 41% growth. Second maximum was in Senior Citizen Savings Scheme. So in the small savings schemes, if you see in 2015, the total amount was 6.2 lakh crore. Now it is 18.1 lakh crore. And in the last 1 year, the growth was 13.8%. And these are the small savings schemes which are very popular. You can see the interest rate also. So you can see the interest rate which is given here. And in most of the schemes, you see the growth is 9%, 10%, 11%. But in Sukanya Samriddhi, the growth is massive, 41%. Second highest growth was in Senior Citizen Savings Scheme, which is 28%. And for the October to December quarter, what will be the interest rate on the small saving scheme? There is no change. So it remains the same. It remains the same. Kisan Vikas Patra, you will get 7.5%. And in Kisan Vikas Patra, the money doubles on maturity. So the money will double in 115 months. Sukanya Samriddhi account, 8.2. Even in the Senior Citizen Savings Scheme, it is 8.2. National Savings Certificate, 7.7. Public Provident Fund, 7.1. That's all you need to know. According to the recently launched 2024 Chainalysis Global Crypto Adoption Index, which country has been ranked number 1 in the global adoption of cryptocurrencies? So in cryptocurrency adoption, you will be very surprised, but India is number 1. The answer is India. You can see here, India is number 1, Nigeria number 2, Indonesia number 3, America number 4, and Vietnam is at 5th position. So Chainalysis is basically American blockchain analysis company, which is headquartered in New York. Here you can see, India, Nigeria, Indonesia, top 3. Life Insurance Corporation of India (LIC) has selected which company to develop its next generation digital platform as a part of DIVE program, Digital Innovation and Value Enhancement. So this is Infosys, which is one of the largest IT companies of India. And what is DIVE program? So LIC wants to basically, digitally transform itself. LIC wants to digitally transform itself. That is what is this program. So this platform will IT enabled. It will enhance the customer experience. It will have business lifecycle management, operational activities for sales intermediary. Everything will be on one platform. DIVE program. So DIVE program will revolutionize LIC's digital infrastructure. LIC's digital infrastructure. And LIC was also in news because it has increased its stake in IRCTC. IRCTC is a mini Ratan category 1 company, and IRCTC was in news recently because it has been now declared as a Schedule A central public sector enterprise, opening the way for it to become Navratan in the future. So what was the shareholding of LIC in IRCTC? It was approximately 7.2%. Now they have increased it by 2% to 9.3%. So LIC now owns 9.3% in IRCTC. As per recent report called Country-Wise Merchandise Trade Performance, India has recorded a trade surplus with as many as 151 countries, while the country has a trade deficit with 75 countries during the first half of this year, that is from January to June 2024. Now, who has given this report? So this is a report given by Global Trade Research Initiative, GTRI. Trade deficit means what? Trade deficit means if with some country we are importing more and exporting less, then we are in a trade deficit. Whereas if we enjoy more exports with a country than import, then we are in a trade surplus. So with 151 countries, we have a trade surplus. Now, which is the country with which India has the highest trade surplus? It is United States of America. And second highest is Netherlands. This is from January to June 2024. And which is the country with which we have highest trade deficit? China. We have a trade deficit of $41 billion with China. Russia is second. Iraq is third. So with 151 countries, we have a trade surplus. With 75 countries, we have a trade deficit. And there are many countries with which our trade deficit is more than $1 billion. So we need to watch out for the same. Competition Commission of India has approved the acquisition of less than 10% equity shareholding by Naspers Ventures BV in which company? So Naspers Ventures is a venture capital company, investment company, and it is acquiring less than 10% equity shareholding. This will be done in Vastu Housing Finance Corporation Limited. It's a housing finance company. And it gives loans for constructing houses, for buying houses. It's a proper housing finance company, right? And around 10% equity has been acquired in this company by Naspers Ventures. Is that understood? So that is the company, and Competition Commission of India has given the approval for the same. Which company has received approval from DIPAM, Department of Investment and Public Asset Management, for raising 4,500 crore through fresh equity issue? The answer is IREDA. So basically IREDA will sell some of its shares in the open market and raise this money, 4,500 crore. And the job of DIPAM, so DIPAM is a department under the Ministry of Finance. The job of DIPAM is disinvestment. And we have a target of 50,000 crore of disinvestment for the financial year 2025. So government is trying its best to achieve the target. Last year we could not achieve our target. So for example, government wants to sell stake in IDBI Bank. They want to sell Nagarnar steel plant in Chhattisgarh. They want to sell the Salem steel plant of SAIL, Steel Authority of India Limited. I mean, government is trying its best, right? A Container Corporation of India, they will sell, right? NTPC Green Energy, they will divest. So government has to make sure that they raise 50,000 crore through disinvestment. According to recently released report, Unlocking the Power of Healthy Longevity, Demographic Change, Non-Communicable Disease and Human Capital. Investing in healthy longevity can save 150 million lives in the low and middle income countries and extend millions more by 2050. Who has given this report? This is given by the World Bank Group. The answer is option D. What are non-communicable diseases which do not spread from one person to another? Like diabetes, like heart failure, heart attack, arthritis. All of these are non-communicable disease. So what does this report say? This report says that 1/3 of the world population will be more than 60 years old by 2050. So the population becoming older will have a tremendous negative impact on the labor, immigration, healthcare, social protection systems and the economies, right? So World Bank Group says that we need to reach 1.5 billion people with better healthcare services by 2030. Right? That is what they say. And non-communicable disease like diabetes, heart disease, cancer, respiratory disease, they account for 70% of all the deaths. 70% of all the deaths, right? In the low and middle income countries. And they have given certain projections. So by 2050, based on the current projection, there will be an increase in the overall death to 92 million. 92 million people will die from non-communicable disease in the low and middle income countries. Currently, in 2023, it is 61 million. So the number will increase to 92 million. The number will increase, right? And they said that we need to therefore focus on the healthcare. So this was the report. Indian REITs Association. REIT is Real Estate Investment Trust. They pool money from different people and invest it into the real estate. So Indian Real Estate Investment Trust Association, they have launched 3 data benchmarking institutions to provide the investors detailed information on the real estate investment trust. As a part of this initiative, 3 financial services companies have launched their respective platform. Which of the following is not one of them? So remember, Big Share is not one of them. CAMS is there, CareEdge is there, and KFintech is there. So these are the 3 companies which have launched their platform where you will get all the interest, if you are interested REIT investor, you will get all the data. So it is like a central repository of standardized and comparable data. DBI, the data benchmarking institutions, will enhance the transparency in the REIT sector of India. So CAMS, CareEdge and KFintech have launched their respective platforms. So what is the name that they have kept? Well, compareitnow.in by CAMS. We have compareitnow.in by CAMS. We have REITs Infra Edge by CareEdge, and we have KFin Insights by KFintech. I don't think the names are very important, right? And currently, how many REITs are there in India which are publicly listed REITs? Brookfield India Real Estate Trust, Embassy Office Parks REIT, Mindspace Business Park REIT, and Nexus Select Trust. So real estate investment trust are a very good option if you want to invest in real estate, but you don't have that much money. You can invest with amount as low as 10 to 15,000, which is the lowest investment in the REITs, which is permissible. And which is the first real estate investment trust in India? Which is the first REIT in India which has secured a funding of 650 crore, sustainability linked bond funding of 650 crore from the World Bank? It is Mindspace Business Parks Real Estate Investment Trust. Which company has become the 4th listed company to cross 10 trillion rupees market cap? Fourth, it is Airtel. The answer is Bharti Airtel. Bharti Airtel and Reliance, Tata Consultancy Service and HDFC Bank. These are the other three. Their market cap is more than 10 trillion. 10 trillion rupees means what? 10 lakh crore. 10 lakh crore. So their market value is more than 10 lakh crore. Bharti Airtel company was founded in 1995. 1995. Recently, which department has notified direct tax Vivad Se Vishwas scheme to resolve the pending appeals in the case of income tax disputes? In the case of income tax dispute, this is the income tax department, also known as CBDT, which works under the Department of Revenue, Ministry of Finance. So Vivad Se Vishwas scheme. So scheme will be starting from 1st of October 2024. 1st October 2024. So this scheme basically incentivizes the taxpayers by offering lower settlement amounts. Lower settlement amount, and the last date is 31st December. So you have a 3 months time. If there is an income tax dispute is there, you can pay less settlement amount and you can just get rid of it. So this is the Vivad Se Vishwas scheme. Look, this scheme was initially started in 2020. 2020. As per the recently released report, Relative Economic Performance of the Indian States, this is a report released by whom? This report analyzes the data from 1960 to 2023-24. So almost 64 years data they have analyzed, and they say that the southern states, Karnataka, Andhra, Telangana, Kerala and Tamil, they contribute 30% to India's GDP. So this report is published by the Economic Advisory Council to the Prime Minister of India, Sanjeev Sanyal and Akanksha Arora. Sanjeev Sanyal and Akanksha Arora, right? So who is the chairman of the Economic Advisory Council to the Prime Minister of India? Bibek Devroy. Bibek Devroy is the chairman of Economic Advisory Council to the Prime Minister of India. So what does this report say? So this report talks about the richest Indian states. Which is the richest Indian state? So it is Sikkim. See, what is the per capita income of India? It is approximately $2,500. I am not saying it. It was said in the economic survey of this year. $2,500, approximately 2.12 lakh rupees is India's per capita income, which means on an average, one Indian earns 2.12 lakh rupees annually. So this is our per capita income. Now there are states in India where the per capita income is higher than $2,500. For example, in Delhi, look at Delhi, it is 250% of that. 250% of $2,500. Telangana, look how rich it is. Karnataka, look, right? But you have very poor state. For example, Bihar. In the financial year 24, you can see relative per capita income, which means if you compare it with the national average of $2,500, Bihar has only 32.8% of that. So approximately $750. That's it. Similarly, Jharkhand. Look at UP, 50.8. So these are among the poorest. These are among the poorest. Now in one line, which is the richest state of India? So here, this is the official table. You can see Sikkim is the richest state of India. You can see Sikkim is the richest state. So how can I say that Sikkim is the richest? Well, Sikkim is the richest because I'll show you the data. Look at Sikkim. The per capita income is 319% of the national average, which is $2,500. So Sikkim is the richest state of India. Which is the second richest? Goa. 290% of the national average is the per capita in Goa. These are the two richest states of India. Now, which is the largest GDP of India? Which state contributes largest to the GDP of India? That data you will find here. You can see Maharashtra, 13.3%. It contributes 13.3%. 13.3% to the India's GDP, right? So it is the largest contributor to the India's GDP. So these are some data which you should remember from the report. And Delhi is also very rich. You can see Delhi 250%, 250%. So Delhi, if I'm not wrong, let me just cross verify with the table. Yeah, Delhi is the third richest in India, and fourth richest is Chandigarh, Union Territory. 235% is the per capita. 235. And then it talks about some states which have degrown, like for example, West Bengal. West Bengal has become poorer. It gives the data about West Bengal, economic decline of West Bengal. You know, in the 1960-61, West Bengal's contribution to India's GDP was 10.5%. In the financial year 24, it is just 5.6%. So West Bengal, their per capita income has also decreased, and their contribution to India's GDP has also decreased significantly. Right? And if you want to know which state contributes how much to India's GDP, you can see this here, right? And you can see the states like Bihar, they are so big, but they contribute just 4.3% to India's GDP. So these definitely they have to improve. UP contributes 9.5%. Maharashtra, of course, 13.3%. But even Maharashtra's share has reduced. Maharashtra used to contribute 15% to India's GDP. Now it is contributing only 13.3% to India's GDP. Government has approved the privatization of which of the following company to Japanese corporation Konoke Transport for 320 crore. 320 crore. So this is the Ferroscrap Nigam Limited. Ferroscrap Nigam Limited has been sold to Konoke Transport for 320 crore. And by the way, Ferroscrap Nigam Limited is a subsidiary of 100% owned subsidiary of MSTC Limited. MSTC Limited. MSTC Limited. Is that clear? And this Ferroscrap Nigam Limited is a Mini Ratan category 2 company. It works under the Ministry of Steel. India signed and exchanged the first of its kind agreement focusing on clean economy, fair economy and IPEF overarching arrangement under Indo-Pacific Economic Framework for Prosperity. IPEF is based on 4 pillars. Which of the following is not one of the pillars? So trade, clean economy, fair economy and supply chain resilience are the 3 pillars. The 4th one is the fair economy. So trade, fair economy, clean economy and supply chain resilience. Digital economy is not one of the pillars of the IPEF. And IPEF, they recently met in Delaware. Delaware is where the Quad Summit, 6th Quad Summit also happened recently. And India has signed the pillar number 2. Pillar number 2, supply chain resilience is the pillar number 2. Trade is the pillar number 1. Then we have fair economy, clean economy and then fair economy. So these are the 4 pillars. Clean economy is the pillar number 3 and fair economy is the pillar number 4. So supply chain resilience pillar number 2, India ratified it in 2024. Pillar number 1, we have not ratified yet, but we are an observer in the pillar number 1. Understood? And recently IPEF, they had their meeting in Singapore also. IPEF, they had their meeting. So IPEF, Indo-Pacific Economic Framework, was created on 23rd of May 2022 in Tokyo in Japan, and 14 countries are a member of IPEF. 14 countries are a member of IPEF. Which of the following online travel company is the first to sell and purchase travel services on ONDC? So this is Ease My Trip. Ease My Trip company. And Ease My Trip, they have created another brand which is called Scan My Trip to sell their products. ScanMyTrip.com, India's first marketplace, which has been launched by Ease My Trip on ONDC. As per recent announcement, new subscribers of EPFO, they can withdraw up to what amount from their Provident Fund account for personal financial need. If you have a Provident Fund account, you could withdraw earlier up to 50,000 rupees in case of a personal need, right? Personal financial need. Now it has been doubled to 1 lakh rupees. It has been doubled to 1 lakh rupees. Also, you don't even need to complete 6 months to withdraw this amount, 1 lakh. Earlier, there was a condition only after 6 months into service you can withdraw. Minimum 6 months you had to complete. Which organization has funded 530 crore for modern management of drinking water supply in 12 cities of Tripura? So in Tripura, there is an initiative called Mukhyamantri Nagar Unnayan Prakalpa, which is for transformation of the Tripura cities. In 12 cities, this program is running. Under this program, there is a modern management of drinking water supply project that will be funded by the Asian Development Bank. So they have given a loan of 530 crore for the same. India has become the 6th largest market in the Morgan Stanley Capital International MSCI All Country World Investable Market Index. Which country has topped the index? You can see America is number 1 with a weightage of 63.23%. India has leapfrogged China. We were 11 basis points higher than China. We were 2.35% and China was 2.24%. So we were 11 basis points higher than them. So India is now the 6th largest market in the MSCI ACWI IMI index. Who among the following has become the chairman for 3 years For Asian Organization of Supreme Audit Institution, so it is Girish Chandra Murmu, who is the CAG of India, and this organization is headquartered in Beijing. This is an organization that is headquartered in Beijing. This organization was founded in 1979, and many countries are a member of it. As many as around 11 countries currently are a member of this organization. ADB's Asian Development Outlook report has come for September. What will be India's GDP growth rate in the financial year that is already ended? So 7% in that, and in the financial year 2025, current financial year, it will be 7.2%. This report comes 2 times a year, April and September. Recent report, India Forward Emerging Perspectives. India is on track to become the 3rd largest economy in the world, and also we will become an upper middle income country. Currently, we are a lower middle income country. This will happen by financial year 2030-31. Who has given this report? So this is a report given by Standard & Poor Global. And here you can see that the GDP growth rate in forecast by Standard & Poor is 6.8% for the financial year 2025. State Bank of India has given a loan of 10,050 crore for thermal power project by Damodar Valley Corporation. This project will be coming up at which place? So there will be 2 units of 800 megawatt each, total 1600 megawatt capacity project coming up in Kodarma in Jharkhand. And this is a project that will be set up by Damodar Valley Corporation, which is headquartered in Kolkata. This is a company that is headquartered in Kolkata. Which organization has given a loan of $50 million for climate adaptive community-based water harvesting project to enhance the water resource management in Meghalaya, where a lot of water harvesting structures will also be set up. So this is a loan again given by the Asian Development Bank. Asian Development Bank. Who has been appointed as the first director of the Fund for Responding to Loss and Damage? Loss and Damages Fund, you must be knowing that. So it is a finance expert from Senegal. His name is Ibrahima Cheikh Diong. Ibrahim Cheikh Diong, a finance expert from Senegal. So he has been appointed for a 4-year term. So look, this fund was created in 2022, right? Under the United Nations Framework Convention on Climate Change. In 2022 we had COP27 in Egypt, Sharm el Sheikh city. That is where Loss and Damages Fund was created. And recently we had the Loss and Damages Fund meeting in Philippines. In fact, the headquarter of this fund will be in Philippines. Loss and Damages Fund will help the small countries which are struggling because of climate change. So it will provide global financial packages to these countries. Philippines recently hosted the board meeting of Loss and Damages Fund, and Philippines in fact will be the headquarter also for this. Another fund that you should know is FMAP. This is a fund created by SIDBI, Small Industries Development Bank of India, and in this fund they plan to have $1 billion. FMAP is financing mitigation and adaptation projects of MSMEs, and $1 billion, and out of that $215.6 million, almost 20% of that has already been contributed by the Green Climate Fund that is headquartered in Incheon in South Korea. Ministry of Health and Family Welfare have collaborated with which organization, and they have inaugurated the Climate and Health Solutions India Conclave. Climate and Health Solutions India Conclave. So what is the answer? They have partnered recently with Asian Development Bank. You can see Asian Development Bank. They want to address the problems of climate change emergency and the public health emergency. Public health emergency. Ministry of Textile, they are celebrating the Platinum Jubilee of Central Silk Board. They have launched a coin to commemorate for the same. So what is the denomination of the coin? The denomination of the coin is 75 rupees. Central Silk Board in Mysuru in Karnataka. This function was there, and we are celebrating 75 years. And this coin is made of 50% silver, 40% copper, 5% nickel, and 5% zinc. And 5% zinc. Look, Central Silk Board is headquartered in Bengaluru. And Central Silk Board, the idea is to promote silk across the world. It works under the Ministry of Textiles. Tax evasion under the GST has surged to 2 lakh crore for the financial year 24. Now, which city has emerged as the highest zone for GST evasion with a total of 70,985 crore? The answer, of course, is Mumbai. Maximum GST evasion in India was from Mumbai, which is the financial capital of India. And how much was from Mumbai? 70,985 crore. Second was Delhi. So Delhi was second, 18,313 crore. Third was Pune, 17,328 crore. And fourth was Gurugram. These are the fourth city, and Hyderabad was fifth. These are the 5 cities in India where GST evasion was the maximum. Now, in which sector the highest GST evasion was there? Online gaming, and then BFSI sector. In online gaming, the GST evasion was 81,875 crore, highest. In the BFSI sector, it was second highest, 18,961 crore. Right? So this is GST evasion for you. We recently celebrated GST Day, 7th GST Day on 1st of July, and the theme was Empowered Trade Overall Growth. In Hindi, Shashakt Vyapar Samagra Vikas. So what was the highest type of GST evasion? That is non-payment of tax. 46% of the cases was non-payment of tax. 20% of the cases were fake input tax credit, right? Fake input tax credit. And the GST evasion is continuously increasing. You can see it was just approximately 8,000 crore in financial year 18, then 19,000 crore, then 21,000 crore, 31,000, 50,000 crore, and now you can see it has crossed 2 lakh crore. Which organization has announced the investment of $70 million in India's private sector to enhance health system, increasing access to affordable housing and supporting small businesses? So this is by DFC, United States DFC, Development Finance Corporation. They are investing this much money, right? In fact, DFC is also putting in $20 million in Panacea Biotech, in a company called Panacea Biotech. $50 million they are putting in Vastu Housing Finance Corporation. So overall $70 million. 20 million in Panacea Biotech Pharmaceutical Company, 50 million in Vastu Housing Finance Company. It is based in Washington DC, DFC. Which bank has introduced Aditi? It's a AI powered virtual relationship manager. Aditi has been launched by Bank of Baroda. Let me show you. So Bank of Baroda has launched 3 things. Aditi, which is a AI powered virtual relationship manager. Gyan Sahai AI, it is a AI enabled generative AI enabled knowledge management platform. Here you will find all the bank's product policies and processes, etc. It will allow employees to handle customer queries more efficiently. So it's a knowledge management platform. And Adi, which is a chatbot. Adi is a again generative AI powered chatbot to help the customers in resolving their queries digitally. So all of these have been launched by recently the Bank of Baroda. Bank of Baroda is very serious about its digital transformation. Board of which of the following bank has approved Sumant Katpalia as their managing director and CEO for 3-year term? 3-year term. So the answer is IndusInd Bank. Once again, he has become the managing director and CEO for 3 more years. Gopalan Srinivasan has become the managing director and CEO of Galaxy Health Insurance Company based in Chennai, and RBI has approved the reappointment of V. Vaidyanathan as managing director and CEO of IDFC First Bank based in Mumbai. iBus Network and Infrastructure Private Limited Company has got an investment of 280 crore from which institution? It will allow iBus to strengthen its market position both domestically and globally. So they have taken this loan from International Finance Corporation, which is a part of the World Bank Group, headquartered in Washington DC. Leading renewable energy project developers, manufacturing companies, banks and financial institutions, they have committed $386 billion for development of renewable energy projects by 2030. Which company leads the pack with a commitment of 100 gigawatt of capacity addition by 2030? So which company will set up 100 gigawatt of renewable energy? It is Reliance Industries Limited. So they will add 100 gigawatt. NTPC will add 41.3 gigawatt. Renew Power, private company headed by Sumant Sinha, will add 40 gigawatt. Right? So there was a special investment drive called Shapath Yatra that was launched recently. And Adani, they will, so this is overall. If you talk about the wind power, Adani Group will set up the highest wind power, 3.9 gigawatt. 3.9 gigawatt. And currently India has around 200 gigawatt of renewable energy capacity. Our target is 500 gigawatt by 2030. If you talk about the companies which have committed the investment, so you can see approximately 25 lakh crore investment has been committed. Highest is by Rural Electrification Corporation, 6 trillion rupees or 6 lakh crore. IRADA is second with 5 lakh crore. Power Finance Corporation is third with 3 lakh crore. Among the banks, State Bank of India has made the largest commitment of 5 lakh crore. Then Punjab National Bank, 79,000 crore. And among the private investor, Brookfield will invest 54,000 crore in Indian renewable energy projects. Mumbai-based Shriram Finance Limited, which is a flagship company of Shriram Group, they have announced Rahul Dravid as their brand ambassador. JBM Ecolife Mobility is a company based in Gurugram. It is a subsidiary of JBM. it has got a funding of $100 million from ADB and AIIB, Asian Development Bank and Asian Infrastructure Investment Bank. This funding will help them to procure up to 650 electric buses. 650 electric buses. Now JBM, they have a plant in Palwal in Haryana. It is the world's largest dedicated electric bus manufacturing facility outside China. They can manufacture 20,000 electric buses annually. Bangalore-based company PhonePe, they have partnered with Singapore company Liquid Group for making cross-border UPI payments. Earlier, they had partnered with PayNow, which is again a company from Singapore. That was the banking awareness for the month of September part 2. I'll see you in the October banking awareness part 1. Thank you for watching StudyIQ.